Hello traders, today is the 22nd of March. My name is Double Hornsey, market analyst YouTrading, and today I'll be discussing 3 things you should do before trading. Keep it all simple, so you should look at fundamental, sentiment, and technical analysis, marry it all together, and come up with a decent trading plan for the day or the week. So looking at the YouTrading.com Forex Heat Map, I use this for sentiment. So sentiment for me is either risk on or risk off. And by that, I mean, are the riskier assets in the markets, like the commodity pairs, commodities, equities, bond yields and things like that, are they being affected by the current mood? And if we look to the left-hand corner of this heat map, we can see that Australian, Canadian, New Zealand dollar to bottom left-hand corner. So when this is green, flows are moving into the commodity pairs. That means there's more of a risk on day today. So we should be seeing commodities like oil, gas, coal going higher. And then we should be seeing the red in the yen, in the Swiss franc, in the US dollar. So these are the safe haven currencies. If they're turning red, then that sort of confirms the more sort of risk on day to day. Obviously, flip that around. So the top right-hand corner is green, bottom left-hand corner is red. Then it's more of a risk off day. So we're being a bit more defensive, looking for safe haven flows, looking for moves into the bonds and equities and things like that to come down. So once we work out which is relatively strong, which is relatively weak, here we can see the New Zealand dollar is the strongest, Japanese yen is the weakest. And that gives us an idea that we should be looking to go long the New Zealand dollar, short the yen. But we could also quite easily be looking to go long the Australian dollar, short the yen, long the New Zealand dollar, short the euro. You get the picture. All right, so bearing those currency pairs in mind when we look at the economic calendar, either for the day or the week. So looking through here, we had New Zealand news late last night. We had Australian news late last night. So maybe those news points there were giving the commodity pairs a bit of a boost. Maybe it's something to do with what's happening in Ukraine. Maybe there's been a bit more of a let off from the attacks from Russia. You have to look into the news, see what's going on that may be affecting the commodity pairs. Looking through, there's no yen news as such. Obviously, the bank holiday in Japan on Monday may have affected current flows in the yen today. If the Japanese traders come back, what are they doing? Are they selling their currency and buying something else? Are they feeling more risk on or off? All right, so looking through the rest of the day, we can see that there's Canadian, pound, dollar, Swiss franc news. So if we were to trade New Zealand dollar yen, we've got nothing to worry about until towards the end of the day when traders will be sort of positioning for the overnight session and the Bank of Japan core CPI. You can see here that year over year, CPI is supposed to come in as previous 0.8%. So maybe there's a move into or out of the yen because of the CPI as well. So third thing is technical analysis. And we can see here that Australian dollar versus the yen has been going higher. On the daily chart on the left-hand side, we see the 20, the 50, the 200 EMAs on the daily chart all pointing higher, momentums to the upside, price actions to the upside. We're making higher highs, higher lows since December 2021 when we had this dip down. Even that didn't really take out the significant low from August 2021. We've now broken through the October 2021 high, and we can see if we look to the left, we have got a lot of clear space to the left-hand side. So currently, Aussie versus the yen is going higher. If we open up a New Zealand dollar chart, we can see that the New Zealand dollar versus the yen is also going higher. Similar sort of thing, 20, 50, 200 EMAs all pointing higher. Price actions like going a lot higher. If we zoom right in, we can see that we had big impulsive move up from the middle of March, then a bit of a sideways compression, and then this big pop today. All right, so Aussie and New Zealand dollar versus the yen both going higher. If we look to the sentiment indicator actually on active trader platform, we can see that 95% of traders that are trading the Aussie yen are trying to short this. So 80% of traders are generally wrong. So the majority of these traders are wrong, and they're on the wrong side of the trade, obviously. They have been for many days. New Zealand dollar versus the yen, similar sort of thing. 90% of traders are trying to short the New Zealand dollar versus the yen. So they're also on the wrong side of the trade. So looking for longs is the way to go. So sentiment and fundamentals kind of confirm that we should be going higher. Nothing really as a roadblock fundamentally to stop this until we get Japanese CPI later on tomorrow. So we've got a few hours ahead of us. Right. Obviously, if you want to take a trade now, you're kind of chasing price. If we were to trade now, it might just run into the 90, and then obviously, we might find some resistance there, some sellers. That might have been the target that they've been gunning for, and then profit taking might happen and we might get a pullback, which is how I like to trade. I like to wait for some sort of bullish impulsive move. So by that, I mean, we want to see higher highs, higher lows, the pullbacks, and we just buy the dips each time. So that's one way of trading. Or we can wait for a reversal in trend. So we could have had a downtrend and then, pullback, a lower low, and then a break of this market structure here with a higher high. Wait for the pullback into this range and then see if we can go higher that way. So if we're comfortable that the daily is going higher towards the 90, we can put a big line across the 90 and say that's a good target. So using our horizontal line, pop in 90. So that's a reminder. We've also got this line here down at 88.492. So if we go back to the daily, we can see that was the high from yesterday. So that's another marker. Going back to the hourly, ideally, what I like to see is a break of structure. So we take this as a break of structure. So at 4 a.m., we had a high, then we had a compression and then a breakout. And what I'd like to normally see is a breakout, a retest of that breakout, and then a continuation higher. Obviously, we haven't had that. So we're now waiting to see whether or not we get more of a sort of push up to the 90, like I said, maybe a pullback on some profit taking. And then the next sort of move is key. Like, do they take out the high again and then keep the momentum to the upside going? Or do they fail to take out the high and then sort of break market structure here? If they do, then we can anticipate some sort of move back down, just find support, find where value is and things like that. So that's when if Fibonacci comes in, you're trying to work out whether or not value resides between a significant low and a high. So around 50, again, if it was to go up to 90, pull back halfway, it would take us back into this little compression here, and then we could get that retest and then move higher. So that's kind of what I'm looking for. Or if you want to sort of just take a quick scalp, say today, you can use all of these principles, but on a smaller time frame. So we can go down to say a 1 minute chart. And what we're seeing here currently is the move up, come back down into the EMA, so the 20 and 50 period moving average on this 1 minute chart has once again provided some sort of dynamic support. Yes, the price has come in and, for a slightly prolonged period of time, compressed here. We did have the 11 o'clock sort of top of the hour. So maybe there is a change of traders. Maybe some UK traders have gone on lunch now. So profit taking around 11 o'clock is to be expected. Now we're waiting to see whether or not this low here from the 1050 high acts as resistance. If it does, then what? Does the market go above it, come back down before going higher? Or are we now waiting for, say, a move above here and then a pullback into, so we had a move up. Now we're waiting to see if we can get back down to this sort of level before going higher. If we wait for this sort of, now we've broken this fractal here. If we wait to come back down in towards the 20 and the 50 period moving average, back down to this sort of breakout, if you like, we had this compression here before the breakout. If we wait for this high here from 1117, then we can put our long indicator on, so we can measure up, see whether or not we actually really want to go long. So your stop loss would go below the nearest swing low. Yeah, open would be at a retest of the 89.75 sort of level. And then your target would be the 90, assuming that we haven't already been there. which would give us a risk reward of 2.89. So that's good. And that would be, a relatively good scalp. So if you were willing to take that short trade and patient enough to do it, you could say, put a buy limit there. Your take profit's going to be at 90. Oh. Your stop loss is going to be at 89,672. And as long as you can afford it, you choose your volume size, place your order. So now we've got a pending order. Now, if we look to the left, we've obviously had, quite a move down as we approach the sort of top of the hour. So if we get this buy limit sort of taken, then we need to be wary of the 89.850 level, because this is obviously where some buyers got in, obviously thinking that this trend was going to continue up. They're now trapped. So they might decide to flip their position if they get back to break even, which means that we need to be aware of that. Either we accept that we can afford this loss in the hope that we get this 2 point, whatever it was, risk to reward ratio, or maybe if price comes down, gets us into the trade and then goes back up to there, we either take some profit at that level, expecting them to also do the same, or we just move our stop loss and then hope for a sort of, a run up, but with no risk. So using fundamentals to make sure that we're in the sort of right sort of trades, sentiment to make sure we're in the right direction, and then technical analysis to make sure we get the right price. That's the way I'd like to trade, and I'll speak to you again tomorrow.